Can't we earn money without buying? Of course we can. People generally tend to believe that the market will rise. You prepare yourself better for a possible downturn. Hello everyone from Coin Engineer. In this video, we will focus on short trades. I will explain how to open a short position on Binance, the world's largest exchange. I will not only explain this, but also discuss which strategies we can combine with short trades. I will provide examples to help you understand this very well. So let's get right into the video. As you know, to perform a short trade, or in other words, to sell short, you need to have a futures wallet. This is also known as leverage trading, or in English, futures. If you don't have a futures account, a sign-up screen will appear when you enter futures. If you directly enter the referral code we provided below, you can benefit from a 10% commission discount on every transaction. Or if you sign up using the link we placed below, the same discount will apply. So what is a short trade, friends? Let me talk a bit about that. In its simplest form, a short trade is a type of transaction that allows you to make money as the price falls. For example, let's open a chart. Here we have the AVAX chart, friends. Let's say you bought AVAX on the spot market. Assume you bought it from here and sold it from there. You made a 34% profit, right? For instance, your 100 lira became 134 lira. This is the normal buying and selling, as you know. We buy on the spot and aim to sell high. But what if we want to short sell from here? So let's say we believe it will drop from here for various reasons. We did technical or fundamental analysis and think AVAX will decline from here. So, can't we make money other than by buying when it goes down? Of course we can make money. This is where short selling comes into play. If you consider opening a short position from here, let's go down. I'll say you exited from here. Let's say you used leverage. So, you would make money as it falls. People generally tend to believe that the market will rise. Especially if you have significant amounts of money in spot, you want to believe that the market will always rise. But declines happen frequently, friends. Declines occur in every period. Even during a bull season, there can be small declines that annoy people. We can never see a perfectly straight candle. That's why what I personally do is use shorting as a kind of insurance. In other words, we can also call this hedging. What do I mean? We always say, if you have 100 liras in crypto, 90 of it should be in spot. You can enter futures with the remaining amount. Of course, you can also increase this spot to 100%. It would actually be much healthier. But if you really want to trade, if you're interested in futures, we always advise not to exceed 10% or even 5%. Now, the only way to make money in spot is for the coin you bought to go up, friends. You have 100 lira, you made a spot purchase with 90 of it, and opened a futures position with the remaining part. So, if the market goes up, you will already profit from the spot. Then why not open a short in futures? This way, in a crisis, you won't have the thought of cashing out the money in the spot. You take your profit from there. You experience a kind of happiness that will sustain you for a few weeks. It increases your psychological strength in the spot. Let's say your wallet in the spot increased without making a profit from the futures. You would incur a loss. But this is exactly why we say to enter with only 5 to 10% of your money in crypto. Especially if all your existing investment is in crypto, you can use shorting IKIs as an option. I'm not talking about shorts with 10 or 20 leverage. Shorts with 1 or 2 leverage can balance the declines in the spot at some point. You prepare yourself better for a possible decline. But if not all your money is in crypto, if you have other investments like gold, stocks, or bonds, then of course you don't need to use this strategy. However, if you are 100% in crypto and have allocated a certain budget for futures, I think it makes more sense to use a large portion of this budget for short positions. When opening a short position, in a long position, you earn as the price goes up. You bought at $20. And when it goes up to $40, it will have doubled. But in futures, this can be a bit confusing mathematically. For this, I actually use the ruler tool on TradingView. Let's say we opened a short position from 32.73. We set an exit target from here. There is a 20% drop in question. So even if we open a leverage position, we can actually achieve a 20% profit. Here I kind of sounded like I was saying open a short, but don't open a high leverage short. As I said, one leverage, two leverage. Open it only to balance the spot. In Bitcoin, Ethereum, Ripple. I mean, I'm talking about cryptocurrencies with large market caps. While we're on TradingView, let me show you a little tip. Something I use very often. When you press I, the chart flips. So actually going up here means the asset is falling. As you can see, $20 here, $8 there. So let me repeat, friends. If you are a trader and you are doing chart analyses and trading accordingly, you are already opening long positions when necessary and short positions when necessary. There's no need to approach futures in this way. What makes futures futures is, in my opinion, the short option rather than leverage. In a normal market, in the spot market, even on the Istanbul Stock Exchange, we can never short sell. But let's say you have bought a large amount of spot Ethereum or Bitcoin. Shorting a portion of it can help prevent potential crises. Of course, if you have entered stop-loss orders, that is, sales orders at certain points in the spot market, then you don't have to use the strategy I mentioned. But if you bought the spot and didn't use a stop-loss, then, as I said, you can use shorting or short selling as a kind of insurance with low leverage. Now I will show you how to do this. In the futures section, there are USDM and CoinM parts. The coin part allows you to trade, short sell, and open long positions using cryptocurrencies. USDM, on the other hand, allows you to trade using USDT, which is based on the US dollar. We generally use USD. As you can see, I have two trades. One is long, the other is short. I opened them with a very small portion of my budget. I have various places in mind. I will make additions as we reach those points. That's how it is, actually. I plan to gradually increase the trade over a long period. This is actually an addition strategy. Also, as you can see here, those who open shorts are shown in red. Those who open longs are shown in green. So this is the order book. We have our chart on the left. From here, we can change our cryptocurrency if we want. But as I said, if you are going to trade in cryptocurrencies with a smaller market cap, we especially recommend keeping the leverage low. By the way, we can also connect to TradingView from here. We can also do what I mentioned from here. When we press Alt-I, the chart inverts. So by opening a short position, we actually conclude that it will go here. It's not very logical from a technical standpoint, but I'll open a short position to show you. Let's short Bitcoin. To briefly talk about the upper section, we see the price of Bitcoin and the funding fee, friends. The funding fee is a type of deduction that long traders pay to short traders or vice versa. In this section, there are other details related to the cryptocurrency. At the bottom, we have our order book. Here, we will see the orders we place or our past orders. There is already a separate video where we explain this panel in general. In this video, we are focusing only on shorting. You can watch that video by clicking on the cards section above or the link in the description. Let's make our plan from here first. Let's say, in fact, look, there is something like this here for short positions. Since it's reversed, the green came here, of course. You can open an isolated or cross trade, but we always recommend isolated. This way, you add the margin yourself. In cross, the Binance application automatically adds or deducts the margin for you. If this is not managed well, or if you are trading with high leverage, it can actually cause your entire futures wallet to be wiped out, instead of just your trade. Therefore, especially if you are an amateur, choose isolated. You know there are limit and market orders. In market, it opens the trade instantly, while in limit, it opens the trade at the price we entered. We can also determine our take profit point in advance. Let the stop point be 60,000. Leverage of 8 is too much. Let's say 2 leverage. Let's say I am holding Bitcoin in my regular spot wallet. In that case, shorting a small amount from here will be a minor insurance. Actually, this is all I wanted to convey, so it might be more logical not to use stop loss or take profit. In fact, let me just write 60,000 directly. Let's enter an order at 60,000. The current price is around 59,270. If it reaches 60,000, it will take me in. Now let's say we opened a 2x leverage. What does that mean, friends? Where is our liquidation zone? In other words, our crash zone. 50% above the point we entered. Let's calculate it right away. If Bitcoin reaches the $90,000 level, then we will be liquidated. If you already have Bitcoin, it will have increased by 50% as well. You can sell a portion and add it here, for example. In that sense, you can use such a hedging, that is, an insurance technique. You also need to look at shorting a bit in this way, friends. Take good care of yourselves, and if you haven't registered on Binance yet, watch the videos below and sign up using the links we shared with you so that you don't pay extra commission.